Hello and welcome. My name is Nkechi Onyenso, and I am the chairman of the Publicity and Advocacy Committee of the Institute of Chartered Secretaries and Administrators of Nigeria, ICSAN. You have joined us again for the ICSAN podcast series 005. Today we have with us a very distinguished guest, Dr. Toyin Sanni. Good afternoon, Doctor, and welcome to the ICSAN podcast.
Thank you. It's a pleasure to be here. Thank you, ICSAN, for having me, and thank you, Mrs. Onyenso. It's lovely to see you again.
The pleasure is mine. So, Dr. Toyin Sanni is an executive vice chair at leading Pan-African Investments Group, Emerging Africa Group, an ESG-led group focused on investing in sectors with catalytic impact on growth and development, cutting across investment banking, trust and asset management, financial technology, infrastructure finance, and capacity building. Dr. Sanni sits on multiple boards, including serving as the chairman, Layer 3 Limited, non-executive director, Transnational Corporation PLC, and member, Nigeria's National Advisory Board on Impact Investing. She is the chair of the NABII Committee on Wholesale Impact Investment Fund, and she's also a member of the National Finance Committee of the same fund. Dr. Sanni is the founder and chairperson of Women in Finance Nigeria and founder of WIFNG UK, a platform for advocacy, development, and networking of women in financial roles and financial services. Her other roles include the chair of the Technical Committee on Financial Literacy and a member of the Investment Committee of Africa's Off-Grid Energy Fund. She also serves as an ambassador for Nigeria for the Africa CEO Forum. Dr. Sanni has extensive experience as a prominent investment banker, business leader, public personality, and speaker, and derives satisfaction from grooming future leaders. She leverages networks across markets and her expertise in leading transformational initiatives and projects to achieve growth and development objectives. Dr. Sanni has attended the Harvard Business School Owner President Management Program, the Lagos Business School CEO Program, and other executive programs at the Harvard and Wharton IESC Business Schools. In 2023, Dr. Sanni was awarded an honorary doctorate in strategic leadership and inclusive finance from the American Management University, California, and she's currently pursuing a doctorate in business administration for the internationalization of African family businesses at the Paris School of Business, France. Dr. Sanni has won numerous awards, including the All Africa Businesswoman of the Year award in 2017. This was hosted by the CNBC/Forbes. She also won the Nigerian CEO of the Year in 2018, hosted by the Pearl Awards, the Tech Times African Influencer CEO Award in 2020 and also in 2021. African Investment Forum Awards, Paris Best Woman Leader, as well as other numerous awards. Dr. Sanni is LinkedIn top voice and one of Africa's foremost thought leaders. Ladies and gentlemen, you will agree with me that we have a very distinguished guest on our podcast, and we'll be talking about Nigerians' financial architecture. And who is better to talk to us about that than Dr. Sanni that we have in the house? So again, thank you very much for joining us for the podcast. And we look forward to a very incisive episode with you on board. We do know that in recent times, the Central Bank of Nigeria, the Apex Bank in the country, has introduced a number of reforms for the financial sector. Looking at your pedigree, what would you say has been the impact of these reforms, bearing in mind they were introduced to stabilize the financial and microeconomic sector of society in Nigeria? What was your take on the recent reforms introduced?
Thank you for the opportunity. So it is true that the Central Bank of Nigeria has embarked on a series of reforms in recent times, and I can say far-reaching reforms. And these reforms have been aimed at, first of all, achieving general macroeconomic stability, but also strengthening the financial system, which are two of the key roles of the Central Bank of Nigeria. Chief amongst these initiatives, of course, have been the consistent increase in monetary policy rates. And we've seen up to 875 basis points increase over 18 months, with the aim largely of curbing inflationary tendencies in the economy. Obviously, these have also been supported by other policy reforms. Again, another major one has been the banking sector recapitalization. And this is targeted at ensuring that our banks are financially strong, our banks are adequately capitalized. Deposit monetary banks are, of course, are also deposit money banks are also well positioned to support the financing requirements of the economy and to ensure bankruptcy remoteness, so to speak, for these institutions. So all of these have been good. Um, and the reforms have presented a mixed bag of opportunities and challenges. On the opportunity side, the banking sector recapitalization has seen already the significant flow of capital into the banks, and that means obviously into the organized sector and into the financial system, which is a healthy development. Secondly, we have also seen a rise in foreign portfolio investments on the back of the increase in interest rates. So that is also positive. On the flip side, challenges will include how this has affected the real sector in terms of manufacturing, companies in the manufacturing sector in particular, um, because obviously it has become much more expensive for them to access funding. And interestingly enough, there is, of course, a pass-through effect of that also into back to inflation, which is the main target of these initiatives. Um, However, um, it is hoped that over time we will reap more of the benefits of these reforms, and very importantly, there will be adjustments, and the market will respond sufficiently, the economy will respond sufficiently for these measures to gradually be moderated. And you will see that at the last MPC, there was no further hike. Rather, there was the general decision to keep the MPR at current level of 27.5%. Thank you.
Thank you for that. I'm going to get to where I'm going to ask, because I saw you talked about it a bit, the impact of all this in different sectors, including manufacturing. I will get to that. But before I get to that, so you've talked about the bouquet of reforms and their impact. Now, as a global player in the financial sector, are there any other kind of reforms or initiatives you think the central bank should be looking at as well in this window of reforms?
Thank you. So let me start by saying that my approach to reforms has always been that, or my approach to the management of the economy has always been that as we pursue the monetary measures, we must also pursue corresponding fiscal measures. So the central bank cannot work in a silo, and to make these initiatives impactful, there has to be a consistent handshake with the policy making organs for, or the fiscal policy making organs. And I'm glad that there is a lot of work that is going on right now in Nigeria with respect, for example, to the overhaul of our entire taxation infrastructure, and policies and reviews of these policies, because those are the kind of measures that have to be taken in conjunction with the measures that the central bank has taken already. I also am glad to see that the central bank has expressed an interest to continue to pursue the digitization of financial services, because those are the kind of reforms that can also ensure and also strengthen the growth of the SMEs and even the MSMEs as well. So I would look forward to continued initiatives to deepen financial inclusion. These initiatives will cut across digitization, would also cut across paying attention to specialized products for women, for example, to include women, and to also include youths as well, and to continue to make sure that the rural areas and rural parts of our economy can also have full access and deeper access to financial services. So those are some initiatives that I look forward to seeing more of to support us.
All right, thank you very much for that. So we know that the inflation rate has been very, very high. But even though recently they reported a slight decrease in the inflation rate, but generally it has been high. Do you think the drop in the inflation rate is due to possible impact of the reforms, or do you think that it was just the way the politics of the nations had played out? And what will you propose for the central bank to do to ensure that this inflation rates keep dropping?
Well, you know, of course, that the CPI index was recently rebased. And as a result of the rebasing of the CPI index, you saw that between January and February, inflation moderated from 34%, which it printed in January, to 24% in February. And
Yes.
this is driven largely by that initiative. Well, it is also a reform initiative. It is an initiative that is not out of place and that is in line with global standards and has enabled us to print, a much more moderate rate of inflation. We hope to see that reflected actually in the experience of Nigerians. And more importantly, hopefully it will give us the permission that we need to begin to moderate interest rates. And that way we can also block the pass-through effect of high interest rates into inflation. Another welcome development is that we have seen a gradual reduction in in foreign exchange rates. That
Yes.
is,
Yes.
so we've seen an increase in the value of the naira against the dollar,
Yes.
and that,
Yes.
over the last couple of months has been a consistent trend. And what that also portends is that if this trend is sustained, remember also that inflation also has a pass-through effect from the cost of importation. We are still, unfortunately, a largely import-dependent economy, both in terms of inputs into the factors of production, but also in terms of what we consume. And so, if that is also sustained and that remains positive, that will also drive down inflation. So, hopefully, we will continue to see a sustained reduction in inflation rate.
Okay, I'm going to deviate a little bit from the financial sector per se, because you said something I found very interesting, which has been said in many other platforms, that Nigeria is majorly a consuming economy. We import more than we export. Do you think there's any way in which the CBN or the financial sector can help us to, or help the nation to make it easier for those that they are exporting to keep exporting? And do you think if this is achieved, it will have an impact on our exchange rates?
Okay, thank you. So, even though I do not think that the policies that led to the domestic devaluation of our domestic currency, even though they were not necessarily targeted at attracting export, but the reality is that that in itself should have encouraged more exports, because
Yeah.
obviously exporters will be earning much higher income, by earning dollars and other hard currency. It does not yet appear to have achieved that, and I think that's probably because of other structural constraints that are still constraining production, first of all, before we can then talk about exports. And so the onus will be not just on the central bank now, but all the handlers of our economy. And so to ensure that we continue to remove the constraints to manufacturing, to continue to remove the constraints to transportation, the entire ecosystem that would support exports. So the entire manufacturing, production, transportation, processing ecosystem that will be required to support a strong export market. In terms of also ensuring that we have the warehouse infrastructure, ensuring that also, and by the way, when you talk about export, one of the strongest targets for export would be the economies that are, geographically closer to us. And so taking advantage of the AFTA initiative to ensure that we have a strong play in the African continental free trade zone is going to be a free trade area. It's going to be a big plus for us. So there's a lot of work to be done, and I'm hopeful that over time we'll get it right.
I'm going to write on what you said the last time. So, what has been hindering Nigeria from taking good use of the African free trade zone? You spoke about it. It has been in place for a while, but then it seems not to be having a major traction in terms of improving our economy. Why do you think this is the case, and what can be done about it?
Okay, so if you look at intra-Africa trade itself, there have been constraints, and these constraints are not limited to Nigeria. So there have been constraints over the years, and these constraints have to be tackled one by one. Now, one of the first major identified constraints, of course, obviously, is the challenge of our multiple currencies across the sub-region, the challenge of the fact that unfortunately when we trade amongst ourselves, we still have to settle these trades in hard currency, largely the dollar. And it's to address this is why the Afro-Exim Bank has been sponsoring the PAPS initiative that is intended to create an opportunity for African companies to trade amongst themselves and settle on that platform without recourse to hard currency. This initiative is going to be a game changer, and I believe it's an advanced stage of adoption and implementation. As we see that come on board, it will remove one of the key constraints. Travel across Africa remains very challenging, very expensive, and unfortunately, it looks like the logistic infrastructure across Africa, travel infrastructure was not designed for travel from one African country to the other. Sometimes it's actually easier to link another country through Europe or through other continents. So again, as we begin to take advantage of institutions like the AFC and the Advocacy that are supposed to support that have are evolving solutions to ensure that we can build a market infrastructure across Africa to support the trade and free and easy movement of people. Those are some of the constraints that need to be addressed. Other constraints that will need to be addressed, obviously, cultural barriers amongst states. I think these are gradually being taken care of. I would also want to speak to the the constraints for Nigeria, for example. Agriculture used to be one of our major export sectors, so to speak. And you know that we have been facing a lot of challenges to agricultural production on account of security issues. If Nigeria is going to go back to being a major player in exporting agricultural produce, then those security concerns have to be addressed on a sustainable basis as well. Let me stop there.
Okay. Thank you very much for that. I had said earlier on, I will come back to this. So, how would you advise the Apex Bank of Nigeria or the Nigerian financial sector to help attract foreign investments into various sectors? We've spoken about agriculture. We also have manufacturing, and we have the technology, the AI, that's also becoming a big thing in Nigeria now. What would you propose will be the strategic plan to attract foreign investment into these various sectors? And will this have any impact on the microeconomics of the country as it is now?
Oh, absolutely. I always like to think of an economy as one giant bank. And at the end of the day, the bank succeeds when there are more deposits than withdrawals. And the bank succeeds when you can make the most use of those deposits and make a decent return for yourself. So the same way as an economy, we need to have um, more investments flowing in than are flowing out. And the more desirable type of investment is foreign direct investment. And that's because these are investments that are sticky. These are investments that, will stay much longer than portfolio investments that, are less sticky. Although, of course, I welcome all forms of foreign investment. Foreign portfolio investments are good for the economy as well. But foreign direct investments are sticky businesses within Nigeria. Now, how do we attract more of these foreign direct investments? We have to fix the end-to-end constraints to productivity so that we can make our markets more attractive. Now, I have mentioned security. Obviously, we have to fix our security concerns. Second thing is our infrastructure. We still have a huge infrastructure deficit. Now we have to also fix our infrastructure deficit. Now, this is both a challenge and an opportunity. There's obviously opportunity to attract long-term investments also to help us build this local infrastructure that we need across rail, across road, across air infrastructure, across ICT infrastructure. Now, how do you attract investors to come and build? We now need to look at the regulatory framework that protects these investors, the legal framework that protects the investors, the rule of law, the quality of governance. We have to look at our policy environment. We have to look at also the implementation of these policies, the consistency. Investors want to see a consistent and even-handed implementation of policies. They don't want to bear the risk of expropriation. They don't want, knee-jerk responses that will withhold or withdraw licenses from them. Then we look at, so beyond infrastructure, beyond the regulatory framework, we then look at domestic investments as well. So investors look at the volume and the stickiness of domestic investments because they're looking at, if when they decide to exit, because eventually they will exit, they want to be sure that there will be off-takers in this market that they can pass on this to. And that takes us to the capital markets as well. So they want to see the size, the strength, the health, the quality of the capital markets, the level of activity, the depth, the liquidity of the capital market in our markets, so that they can be encouraged to invest, knowing that when they do choose to exit, the capital market will be there. Obviously, the quality of our financial institutions as well, the health, the soundness, the quality of our financial institutions, the ability for them to raise counterpart funding locally to support what they bring from offshore when they invest, and those are some considerations. Those are some of the things we need to fix.
All right. Thank you very much. So how do you think in all this we can, speaking as a global leader in the finance sector, we can attract women, more women to come into this space? How do you think, I was going to ask that question anyway. How do you think we can do that?
So women have to be sure of an equal and even playing ground, first of all. By the way, that is the base. So the base is to say there are equal opportunities for all. The base is to say, I will not be discriminated against on account of my gender. The base is to say I will be able to access funding for my business initiatives as an entrepreneur, um, as well as a man. But then we go higher than the base because you now have to talk about positive affirmative action. The fact of the matter is that women have been disadvantaged for decades, is that we are underrepresented in both in the financial decision making, um, those who are appraising, the financial requests, and also in the leadership of and on boards where decisions are boards of banks, board of institutions, where approvals of these requests will come to. So because of that, we actually have to do more than just an equal playing ground. We actually have to compensate for the gaps of the past by actively setting targets for banks, financial institutions, for organizations, in terms of what proportion of funding, what proportion of leadership positions, what proportion of board positions are being made available for women, so that we can bridge the gap and so that we can fix the problem. If we go on, so many statistics across the world have shown that if everything continues at the pace which it is, a lot of our inclusion gaps will still need like 2 to 3 centuries for us to catch up. We can't afford to
Oh,
wait
wow.
for. So if we're not going to wait for that, then we're going to need to set standards to close the gap. And
So
of
what
course,
standards would you?
education to be available,
Okay.
technology support through technology, digital technology, support for more women to go into STEM and coding, policies that will mandate, so we've had positive policies and standards that for the banking sector, which was done imposed by the central bank, where it was mandated that there will be 30% female representation, and we've seen the positive effects of that with women on board in our market. But what I'm saying is that the standard should be 50%. So if you ask me what are the standards should be that we should be fully represented equally in proportion to our representation in the economy, I mean in the population, in board positions, leadership positions, in um, opportunities for funding, access to capital, venture capital, private equity, and loan facilities as well.
All right. Thank you very much. We've seen that Nigerian banks do very well in other African countries. We have a few of our banks. I know that I do business in Ghana, I do business in Sierra Leone and Liberia, and I see some of our banks there. So obviously, some things are working. Okay. And um, I don't think, if I'm not aware of any other African bank, very few, if any, that's in Nigeria. So we have
Standard
something.
Standard Bank of
Sorry.
South Africa is the largest bank in Africa. They've been in Nigeria for several years. So Stanbic
Okay.
IBTC is an arm of Standard Bank. Rand
Okay.
Merchant Bank is a South African bank. They've been in Nigeria for quite a while as well.
Okay.
I'm sure there are a few more, but I agree with you that we have more. We've exported more banks to many more African countries than it
Country.
seems that
Yeah. Yeah.
African
So
banks have done.
my thoughts are, what are the things we did right, and how can we improve on them? And has this been very impactful in the view of Nigerians' financial sector outside Nigeria?
Okay, thank you. So I'm going to say that sometimes the banks are very big. They're some of the biggest companies in our economy. They're also very visible, and so sometimes it seems that they're the only ones that are spreading across Africa. Dangote has done a significant um, job of expansion across Africa. Our Globalcom has done a good job of spreading beyond Nigeria. So looking at the communication side, we've had also some of our tech companies are doing very well in not just Africa but also global footprints. We've had, and we started with food. I don't know whether you remember in those early days where we had,
Oh, okay.
I think it was Jobitex or some of these,
Yes, yes, yes.
canned and packaged foods, on the back of Ecomart and all that. So
Yeah.
we have had, more companies expanding apart from the banks. But yes, the banks have been very visible. Now, what have they done right? I think one of the things they've done right is that with um, they've partnered with locals in those economies. That has helped them.
So you were speaking about how our banks, I don't know if I should ask the question again,
No,
because
I think I made the point.
that
Yeah,
went
yeah.
off, that period went
So,
off,
so I
as
made the
in
point.
how our banks have been able to set up in other African countries and are doing
So
so
first of
well.
all, I
What are
said
the
they've
things
done
we
a
can
good
learn from
job.
that experience?
Yes, they've done a good job of partnering with domestic investors because that has helped to address some of the cultural resistance issues. I think the banks also have done a good job of positioning their brand and advertising internationally. Our banks have always advertised on CNN and other international media. I think that has helped CNBC. I think that has helped them even ahead of their appearance in those markets. I think also they were well capitalized, and when they arrived on those markets, they did not play small at all. They were able to establish very strong, financially strong institutions, and they brought the Nigerianities, so to speak, into the environments where they worked, and that can be very captivating, if not overwhelming. I think they also adopted a service excellence approach. And so, where in markets where banking had been armchair banking and had been where clients felt like customers felt they had been taken advantage of, were taken for granted, you had our banks coming in with customer centric and very very dynamic approaches that have helped them to gain market share. I think those are some of the things that have helped. They've leveraged shared services for efficiencies. So many of them were able to leverage a lot of support from the Nigerian headquarters, not duplicating anything on the back of technology, using shared services to deliver excellent services in those markets. So I think there are a lot of learning points for any Nigerian business that wants to expand
All right.
across the
Thank,
country.
thank you. Thank you very much. Last question before we go. So we have the National Code of Corporate Governance that has been on for a few years now. Do you think this has impacted the financial sector? If yes, how? And if no, why do you think so?
So I think the National Code of Governance has impacted the financial services sector and also impacted businesses because you find out that even businesses that are not obliged to adopt the code have continued to adopt the code. Regulated businesses obviously are, required, to comply, by their regulators. But also, you have found that even all non-regulated businesses have continued to volunteer. Because first of all, is the fact that it has held up a standard. For those who don't know, they now have a code that they can check and use as a standard for them to improve on governance. It has created sensitized people, created information, knowledge, made knowledge available, and gradually, has helped to shape standards and shape behaviors, especially in the financial services sector, especially with the partnering with the regulators, with the handshake with the regulators, working through for us, for example, the Securities and Exchange Commission. I expect that the progress will continue. Thank you.
All right. Thank you very much, Dr. Sanni, for spending time with us at the ICSAN Podcast Series 005. On behalf of the President of the Institute, Mrs. Fumi Ekundayo, FCIS, the council members and all the members, which you are one of us anyway. We thank you for this opportunity, and we look forward to further engagement on this and other things. Thank you so much. My name has been Nkechi Onyenso, Chairman, Publicity and Advocacy Committee, and we thank you for all you continuously do for women and for the financial sector. Thank you. Bye-bye.
Thank you, Nkechi. It's been a real pleasure talking to you. Thank you for your time.
Thank you. Thank you.